Hello traders, and welcome back to the Forex Geek. In today's video we're going to be talking about the bearish inside bar candlestick pattern, which is a reversal signal that can transform your trading approach. You will learn how to identify this candlestick formation, the exact entry points, stop loss placements, and take profit targets. And this will help maximize your probability of success trading the markets. Stay on to the end of this video to master the nuances of trading the bearish inside bar candlestick pattern. So without wasting much of your time, let's get started. Let's start with the setup recognition, the pattern recognition. The bearish inside bar is a 2 candlestick pattern that signals a potential reversal in an uptrend. It consists of a large bullish candle called the mother bar, which is the first candle, followed by a smaller candle known as the inside bar or baby candle, and this candle is completely contained within the range of the mother bar. The inside bar has a lower high and a higher low compared to the mother bar. This pattern indicates a temporary consolidation or a decline in buying pressure following a significant upward price movement. The formation of the bearish inside bar suggests that the market is losing bullish momentum and could be preparing for a reversal to the downside. It's a valuable pattern because it signifies that the market is not as bullish as it was during the mother bar's formation. So the key characteristics of this bearish inside bar candlestick pattern is it must contain 2 candlestick pattern, the mother bar and the inside bar. The mother bar is a large bullish candle, and the inside bar is smaller and completely contained within the mother bar's range. The inside bar has a lower high and higher low than the mother bar, and the candlestick pattern entirely indicates a pause in the uptrend and potential reversal. For it forms near key resistance levels also. So let's hop on the charts and look for examples of the bearish inside bar candlestick pattern. As you can see, I've marked out some of the bearish inside bar candlestick pattern I could find on the charts. You can see one example here. Have the first candle, which is the mother bar, which is the bullish candle, and we have the baby candle right here, which is the bearish candle. You can see it fully contained within the first candle. And let me look for another example. You can see this one. So the first candle is a bullish candle, and you have the next candle contained within the first candle's range. This is another example. Here we have multiple bearish inside bars. So these are all examples of bearish inside bar candlestick patterns. Okay, I have another one here. Let me just zoom in. This is another example of the bearish inside bar. You have a bullish candle and you have the baby candle, the inside bar. I have 2 inside bar candlestick here. So that is our bearish inside bar candlestick pattern. So now that you've identified the bearish inside bar candlestick pattern, let's break down the trading strategy. Let's talk about how you can use this candlestick pattern in your trades. So this approach will help you capitalize on potential bearish reversals with precision. So to enter a trade, you must place a sell trade just below the low of the mother bar. Once your candlestick has formed, let me just go to a better example that will enable me explain this. So once your candlestick pattern has formed, you should place a sell trade once price breaks below the mother bar, confirming the bearish momentum. As you can see, once price breaks below this mother bar candlestick pattern, it's expected that price should continue to the downside, and we can place our sell orders right here with stop losses above the mother candlestick high, and I take profits at fixed risk reward ratio of 1:2 or significant support levels like this one right here. Okay, but the very first thing before you start looking for your candlestick pattern, like I've always said in my videos, is you should always look at the general market context and also the overall price action. Are we in a bullish trend or are we in a bearish trend? Are we at key levels? Are we at major resistance levels? In this case, we are talking about the bearish inside bar, which is a reversal candlestick pattern, so we should be at major resistance levels. So you can see, looking at this, we are at a major resistance zone, which is this right here. So we should be expecting a reversal to continue the trend to the downward side. And as you can see, as price got to this resistance level right here, we had the candlestick pattern giving us the confirmation to short. So it's not just about looking for the bearish inside bar and just using it to trade blindly. You must always incorporate price action, and you can also use your moving average or your RSI as additional indicators before you take any trade of the bearish inside bar candlestick pattern. So looking at this, this is what we saw before. We could call this a tradable bearish inside bar candlestick pattern. As you can see, for the next example, this is another resistance zone, and you can see here we have another major level of resistance. So this is how we are able to capitalize on this short trades. So once you see key levels, key resistance levels like this within that zone, you can look for your bearish inside bar candlestick pattern, and you will see it. Once you see it, you could place your sell orders below the low of the mother bar or the mother candle, your stop losses above the high of the mother candlestick, and your take profits at fixed risk to reward ratio of 1:2, or you could set your targets at significant support levels like this one. So this would have been a 1:10 risk to reward ratio if we had taken this trade. So remember, the first step is to look at the overall market context, then identify your pattern and ensure that you wait out for the confirmation, which is price closing below the low of the mother candlestick. So that is how you can trade using the bearish inside bar candlestick. For advanced concepts, we have what we call the multiple inside bars. We've talked about it, we brushed it a little bit. So the multiple inside bars occurs when you observe two or more consecutive inside bars forming within the range of a mother bar. So this formation is significant because it indicates a prolonged consolidation period and a buildup of potential energy. So let me just go. I think we have one example here. There's one example. You can see this. We have multiple inside bars. So when you spot multiple inside bars like this, it often signals a more substantial likelihood of a reversal. The market is essentially coiling or compressing like a spring being pushed down, and this compression typically leads to a more explosive move once the price breaks out of that range. As you can see, we have several gaps after price broke out of this multiple inside bars we have here. As price closed below the low of the mother bar, we had huge red candles confirming the bearish momentum. So you could just enter your sell trades here with your take profit at 1:2 risk to reward ratios, or you could just target significant resistance zones, support zones, I mean. So that's how you can use the bearish inside bar candlestick to trade. Keep in mind that with multiple inside bars, you can get powerful reversals, but they require more patience. The consolidation period can last for several candles before the actual breakout occurs. Alright traders, you've come to the end of today's video. By now you should have a solid understanding of the bearish inside bar candlestick pattern and how to trade it effectively. Remember to identify the key characteristics of the pattern and use the entry triggers, the stop loss placements, and the take profit targets discussed. Keep an eye out for multiple inside bars as they can signal even stronger reversal opportunities. If you found value in this video, please hit the like button and subscribe to the channel for more insightful trading content. Don't forget to turn on the notification bell so you won't miss out on more trading strategies that we will be posting. Thank you for tuning in, and until next time, happy trading.